Any questions related to internal controls? You can imagine it's a pretty interesting area of accounting. For me, I think it's terribly boring. I don't enjoy it. But if you, I mean, I don't like trying to look into systems and flowcharts. It's not my thing. But you can join the CIA, as a fraud accountant and get a gun and all that fun stuff by becoming an expert in internal controls. And I've had people who like fly around. I have friends who fly around the world finding and investigating companies that might be committing fraud. So it's can be a very fascinating job if you like this kind of thing. Yeah. Not my thing though. Not my specialty. And sorry, let me stop record. Pause. Let's talk about cash. It seems like the definition of cash shouldn't be too complex, right? And what is the definition of cash? It's just cash. But cash equivalence has an interesting definition, so we'll go into it. Control of cash. So we're talking about controls a little bit here. An effective system of internal controls that protects cash. And so some simple things here. These are common sense, but if you haven't thought about it, it is actually important, right? If someone is handling cash, if you have a cashier, that cashier shouldn't also be the accountant, right? Because then they could just say, oh, maybe they received $500, but they put in the system they only received $300 for the day. That's a big issue, right? Because they could just pocket the $200. So you should always have those people be separate. If we're paying cash out, it should have to be made by a company check, so we can always see who's paying the cash out. And those company checks should be controlled by an executive or someone with the correct controls or approval rights. And if we receive cash, we should move it in the bank quick. So I had a company that I worked for when I was bartending, where they would deposit their cash every Friday. Well, an employee knew about this, and on Thursday, they went to the safe and stole the safe, right? How could they avoided this if they just went to the bank and deposited the cash every day, right? It would limit the risk a lot. So there's ways that we can make sure that this stuff doesn't happen. So we've talked about liquidity before a little bit, but liquidity just means our ability to convert an asset into cash quickly. So cash is the most liquid asset, right? The next most liquid asset would be cash equivalents. So any investments that we could sell quickly to turn into cash. Then inventory is also pretty liquid because we sell it for cash, and accounts receivable is also liquid because we expect to receive cash soon. Examples of not liquid assets are land or buildings. Like, it takes a lot of effort to sell a building or land. That's not liquid. So that's when we're talking liquidity. Think about cash on one side and land on the other. Like, hey, land's going to take a few months to sell. Cash is pretty easy to collect. Cash is just cash. What do we mean by cash? Cash is currency, coins, or any amounts in a bank account. It also includes like checks and money orders. Cash equivalents are cash that can be collected, something that'll turn into cash within 90 days and can be converted at our choice, on our control. So something like a money market account would be considered a cash equivalent. That's like an account. That's like a type of savings account. Or if we have an investment that we know will be coming due in 90 days, that's also known as a cash equivalent. So there's two goals in accounting in general. So I've talked about financial accounting and like on the legal side, but if we're a manager in accounting, there's two goals. And even for business in general, how do we make more money, revenue, and how do we manage our costs? That's all it is. Like, hey, how do I make more money? How do I lower my expenses? Same goes for your personal finances. If you want to get rich, there's two ways to do it. You make more money or you lower your expenses. That's the only way you can get rich, right? You either make more or you lower your expenses. It's super simple. Everyone will make it more complicated. That's all you do. All you have to worry about. So the goals of cash management is we want to collect cash as soon as possible and then make sure that we spend it very late, right? And I've talked about this in other classes where if if as in my consulting company, I make sure people pay me up front or they pay me within 2 weeks. But when I'm paying other people, I normally pay them in a month or two. Why? Because I like holding on to cash. I can use cash, right? It's part of your negotiation. So goals of cash management is to make sure that we're receiving cash quickly and paying it out slowly. We want to plan our cash receipts to make sure we want to make sure we have enough cash on hand to pay whatever we owe. And then we also want to keep a minimum level of cash. This is true for your personal finance as well. And for your personal finance, kind of a goal is to have an emergency fund. You should have no debts if possible, and until you're able to take a mortgage or something like that. And you should have an emergency fund, about like 6 months of your finances to live on. After that, if you hold more money than that, you're kind of wasting the money because of inflation. You should be investing that money. Same thing with a business. If a business holds on to $1 billion of cash and isn't investing it, then they're losing out on that investment, and then inflation will make the money lose value over time. So you only want to keep a minimum level of cash necessary to operate, and we want to invest the rest. So so effective cash management encourages the collection of receivables. Like, we want to collect quickly. We want to slow down our payment of liabilities as long as possible. We only keep necessary assets. So like, hey, if we have a bunch of inventory that's obsolete, we don't want to hold on to it. We want to get rid of it because it costs money to hold on to it. We want to make sure we plan our expenditures in advance. And if we have too much cash, we want to invest it to make a return. Cool thing about this is the same for your personal finances. So even if you're not going to own a business, this is how you should be managing it. You want to make sure you get your money quickly. You want to make sure you pay over a long period of time. You don't want to pay off those liabilities too quickly if there's no interest. If there's a high interest, it's a different situation. We only want to keep what's necessary. We don't want to have a huge house and have a bunch of stuff we don't use. And we want to make sure if we are going to make an expense, it's planned and budgeted. And then if we have extra cash, we invest it to make a return in our 401ks or our investment accounts. Any questions about cash? There's like cash in general and cash management strategy. And if personal finance is interesting to you, we can always talk more about it after class too. And I'll keep going then. So how do we apply internal controls to cash? So over-the-counter cash receipts, the clerk might have to ring up some kind of sale on the register. They'll prepare all the cash on the register at the end. The sales department collects the cash, and then the cashier department will check the cash sheets and then put them on some kind of like dated form. And then a supervisor will register this data and make sure that it all reconciles. And then they're going to prepare all this information and then send it to the accounting department. So you can see here, there's a bifurcation of duties of who's collecting the cash and who's recording it and then who's reviewing it. So for a retail business, we might have cash over and short, a cash over and short account. So all this means is sometimes we make an error in our register. And so if we have an error in our register, all we do is we have a cash amount, right? Cash is an asset. Assets have a debit normal balance. So we debit 555. This is how much cash we have at the end of the day. But we might have seen in our register that we only sold $550 worth of goods, right? So then we have this cash over and short. So someone might have forgotten to plug in a sale on the register. And so we'd have this cash over and short of 5, which would be a credit if we're over, if we have too much cash, or a debit if we're short. And managers, if you've ever worked a cash register, your manager is going to check this. And if you're short too much, that's when you get in trouble, right? And you don't want to be too over either, because that means you're not giving people the proper change. So same here. If we have too much cash, it's a credit balance. If it's too little cash, it's a debit balance. We also might receive cash by mail. By cash, we mean checks too, right? Remember, our definition of cash isn't just money, it's also checks. So we might receive a check by mail. So if we receive a check by mail, preferably there's 2 people assigned to opening the mail, so someone doesn't pocket one of the receipts. And then the cashier deposits the money into the bank. And then we have a record keeper making sure that they reconcile all of this and receive the live records. We can also pay cash. So how do we control paying cash? We should make sure that no one really has a lot of cash on hand. It should be required by checks so we can track how the cash is being used. Then we limit access to checks. So a lot of companies might say, hey, checks up to $100 can be written by a manager, and then that's reviewed. Like, oh, is the manager using the correct amount of money? Over $1,000, maybe a VP needs to sign off on it, and over $10,000, 2 VPs. So everyone knows how the money is being used. If you work for a big consulting company or a big corporation, you might get a company credit card. It's very similar, where if I run an expense through a company credit card, my manager might have to check it if it's over $100. If it's over 1,000, her manager might have to check it. If it's over 10,000, their manager, right? So on and so forth. And a voucher system, we can also use cash vouchers to make sure that we're approving these cash disbursements. So you might actually have to fill out a form saying, I'm going to give this much cash on this day and get it approved before I issue a check. And this is what it would look like. This is how complex it can get, right? The cashier wants to send a check. They need to send it to the supplier. The accounting will need to give approval of the invoice to the cashier. And then afterwards, we'll have a receiving report. You don't need to know this whole process. You'll go into it in detail. This is just an illustration of how all the different forms that might come into play just for one voucher. And this voucher would have all of this information on it. So this would be used in let's say I'm a company that needs to purchase a large piece of equipment. Like maybe Tesla needs to purchase 100,000 pounds of steel. We would need to go through this large process in order to make sure that we aren't wasting money, right? So someone would say, we need this many assets. We need 100,000 pounds of steel. Then the purchasing department would say, okay, we approve it. Accounting approves it. Let's make sure that we can actually agree upon something with a supplier. The supplier says, okay, we agree on this. Here's an invoice. And then we'll make a receiving report, approve the invoice, and then send a check. But there's a huge process, especially based on the dollar value. So let's go over some of these questions. A good system of internal controls for cash provides adequate procedures for protecting both cash. Which of the following statements are true? So over-the-counter cash receipts from sale should be recorded on a cash register all the time for each sale. True. All cash should be recorded on the cash register, right? We shouldn't be collecting cash and not recording the sale. We should always make sure that there's some kind of record of sale. Custody over cash should be separate from record keeping. We talked about that. True also, right? Like we need to have a segregation of duties. We can't have someone collecting the cash and also changing the records. For control of cash receipts that arrive through the mail, 2 people should be assigned to opening it, right? If one person's assigned, they could pocket the check. This is called the segregation of duties. A key control to the cash will require no expenditure be made by check. Instead, all expenditures should be made from petty cash. That's false, right? Petty cash or cash on hand will make it very difficult to track how the expenses are being used. I could say, oh, I need $100 for printer paper and then go buy myself a nice meal, right? This is false. We should be using checks whenever possible. The voucher system of control should be applied only to purchase of inventory and never to expenditures. Nope, we can use the voucher system. It should just be used. It could be used for all services and all purchases. It'll help, but in general, it is only used in practice for large purchases.